What is up, everybody? Welcome back to another episode of Bitcoin and Markets. My name is Ansel Linder. Happy Monday out there. Hope you guys had a good weekend. Big day for Bitcoin. Breaking out a little bit here. We will go over the price, but the main topic for Mondays here on the show is the Bitcoin Fundamentals Report. That is the most comprehensive newsletter in Bitcoin that I put out every Monday, and we're going to go over that. It covers Bitcoin price, mining, headlines, macro headlines, even layer 2 when there's important stuff going on for layer 2. So let's jump right into it. Share the screen. Let's see, which one am I at here? So bitcoinandmarkets.com. Oh, guys, also I am live streaming on YouTube, Rumble, Twitter, and Telegram. If you're watching on Twitter, which is where a lot of the views happen, please jump over to the YouTube, trying to grow that subscriber base up to 1,000. We're at 512 right now. We had a good number of views on Friday's live stream, trying to grow that and get people to subscribe. Also, I can answer questions really easy. It's a good interface that I have here with Restream, so I can see all of your comments as they come up. So put those down in the chat. BTCP says, happy Monday. Happy Monday, man. Back to the grind here. I did some good work this weekend. Still, I slow rolling this office makeover. So if you see behind me, I built the bookshelf and I have a Murphy bed in there. And I did one architectural wall. And I've painted most of it, but I've been putting off finishing the door and the trim and some of the crown molding and stuff. So I had a productive weekend putting on all the trim for the door and getting the last mud on the wall around the door. So anyways, it was a productive weekend. We also won our soccer game this weekend, and my daughters came runner-up in their softball tournament. So it was a very good weekend for the Lindner household. Okay, bitcoinandmarkets.com. Fundamentals report number 311. Got some building momentum with the ball going downhill or the boulder. Quick navigation. If you're only interested in price, you can go there, but this is a real quick way to find everything. Also, okay, guys, so white paper day is 3 days away. It's on Halloween. So we have some white paper special discounts. If you want to join the professional tier, that's usually $15 a month. You can do that now, half off for the first month. Just see how it is. It's a great way to support my content, support independent Bitcoin content that has never sold a scam. Been here reporting on Bitcoin. Found Bitcoin from the gold bug side of the house, was very kind of consensus, Ron Paul, finding Bitcoin. And my views have very much changed over the years. And I hold this very unique position in Bitcoin as pretty much the only proponent of deflation in Bitcoin from any Bitcoiners. Jeff Booth talks about deflation, but he talks about it from a different perspective than he talks about actually from a supply perspective. But I don't. I talk about it from a credit perspective. So anyway, that's what you support my special content if you do that. If you just want to be a regular $5 member, you can save half on your first month, and you can join our price forecast competition. So every month, people that are $5 members or higher can enter the price forecast competition where you guess the price at the end of the monthly candle. And the closest person wins $20 in sats. So you get a way to win back 4 months worth of your membership if you go about doing that. We've been running that since I think before COVID, like 2019 or something. And, some months we have slower months or a period where the activity on that goes down. But I would like to see 100 people enter. That would be really, really cool. So, all right, let's get on with the show. Snapshot of Bitcoin. Weekly trend. It wants badly to break out, and it did break out a little bit here. We will go over the live chart when we get down to price. Media sentiment is positive. I could even go very positive. This is not scientific. We had a guy from Van Eck go on CNBC today. Very, very positive coverage of Bitcoin. But I left it as just positive because there's been so many attacks from the ECB and some writers at the Federal Reserve on Bitcoin recently. So I went ahead and left this positive. Also, there's some Tether FUD, which we'll cover. So overall, not very positive, just positive for the week. Imagine when it does go to very positive. Network traffic is low. We'll cover mempool and all that. Mining industry is at all-time highs, both in hash rate and difficulty. And it's very, very healthy. Price section for the snapshot, $69,130 at the time of writing. It got as high as $69,800. So by the time of live stream, we'll see if it breaks out further on this live stream. But at that time, it was up 1,500 or 2.2% issue to issue, Monday to Monday. Market cap is sitting at 1.36 trillion. Satoshis per dollar, 1449. And one finny, that's my denomination that I keep pushing. I'm going to not die on this hill, but I'm going to keep pushing this. That's half of the decimal places is one finny, and that's $6.90 for you people out there worried about unit bias. All right, mining sector. Last difficulty adjustment was plus 3.9, almost 4%. I think that difficulty period started negative, like -2 or 3%. And by the time that, the difficulty adjustment happened, it was plus almost 4%. So that was a really big swing. And the next adjustment here is estimated to be 5% in about a week's time. Mempool at the time of writing was sitting at 107 megabytes. That's down about 10 megabytes from last week. Fees for the next block, 29 cents or 3 sats per virtual byte. Extremely, extremely cheap. And a low priority fee, you can't save any money. All right, capacity for the Lightning Network actually went up by 49 Bitcoins this week, 52.25. And I'm going to zoom in. Maybe you guys can see that a little better. All right. Channels, however, dropped by a whole percent, by negative 1.1%. 500 channels on net closed on the Lightning Network this week. So kind of a mixed signal here. If you guys have been watching my content, I hope the best for Lightning, but right now it's just not clicking with people. It is turning into hub and spoke. And, long time ago when we were having the scaling conflict and Lightning was just getting started, that was one of the big criticisms, is that Lightning would turn into hub and spoke. And it pretty much is, but it's still possible to do it. So if there was demand, then the Lightning Network is there. It offers a solution if there is demand. But like Bitcoin, or unlike altcoins, Bitcoin, doesn't, what I'm trying to say is that altcoins, they try to build something thinking that demand will come, okay? That supply will beget demand. But it's just the opposite of that, right? It's demand that begets supply. And Bitcoin Lightning Network is a really good example of that. If there was demand, there would be higher capacity and more channels opened up for people. Okay, let's move on to the headlines section, but let me check any comments in Telegram. Let me see any in here. No. All right, let's move on. Maximize that again for Telegram. So Emory University becomes first endowment to buy Bitcoin ETFs. You see this is an image from, I took it from Eric Balkunis, but it's the Bloomberg terminal looking at Grayscale Mini Trust. So they bought almost 16 million of the Grayscale Mini Trust. And this is a big deal because this is the first endowment of this type. There's probably smaller endowments and stuff, that have invested in Bitcoin, but this is the first one of its type. The first large endowment has disclosed ownership of 16 million in Bitcoin in their latest filing. We should expect more filings over the next couple weeks as the mid-quarter deadline approaches. So every quarter, you have another 6 weeks to make your 13F filings. And these are for firms or entities that are above 100 million in assets under management. You have to file a 13F. And on there, you are able to see who owns the Bitcoin. And that's very, very interesting. Last quarter, we saw a bunch of sovereign wealth funds and central banks buying MSTR, which I think, once again, this quarter is going to be pretty huge. There's going to be a huge inflow into MSTR from these 13F filings and Bitcoin ETF as well, obviously. So I'm anticipating big numbers. So that's that story. Let's go on to the next one. Saylor recants. I have to report on this for full news coverage. I don't really, to me, this is not a very big story, but it was a very big story on X in the Bitcoin community. So anyway, I'm reporting on it. Last week I said to watch what he does, not what he says. He is currently running a massive speculative attack on the dollar, which is all that should concern you, not what he says in an interview. The pressure apparently became too much for Saylor, though, and he has recanted. And this is what he said: I support self-custody for those willing and able, the right to self-custody for all, and freedom to choose the form of custody and custodian for individuals and institutions globally. Bitcoin benefits from all forms of investment by all types of entities and should welcome everyone. Okay. He also tweeted out this post or this video from Bitcoin University here, Matthew Crater, and it is about why self-custody matters. So he tried to make amends to the community. Again, I'm watching what he does, and he's running a speculative attack on the dollar, and that's all that matters to me. All right, next story. The newest Tether FUD. Reports indicate that the U.S. government has opened an investigation into Tether for possible violations and sanctions, anti-money laundering laws. I should have added in here, and I'm going to go back and do that real quick on the fly because I think this is important, and I forgot to put it in there, that it has been refuted by Paul Arduino. I don't want to lead you guys astray with this. Okay, good enough. Let's go back and refresh this. So the allegation has been refuted by Tether. Okay, so nothing new here. Notice that all the allegations don't concern solvency, but the Tether solvency bots were activated anyway. There's this group of bots on Twitter. Maybe they're bots. Maybe they're just misguided individuals that as soon as they hear something bad about Tether, they get activated and they start talking about why Tether is screwed. Tether is going to die. It's a big Ponzi scheme. But of course, I know it's not. And if you're watching the show, most likely you know that it's not a Ponzi scheme either. So let's see. Of course, these are 100% lies. The CEO of Cantor Fitzgerald, a primary dealer and treasury banker for Tether, has unlimited instant liquidity. So they can go right to the Fed and get instant liquidity for their treasuries. All right. They can go to the discount window, get whatever they want. So that is who is holding treasuries for Tether. So Tether actually has instant liquidity, and they deal with trillions of treasuries, Cantor Fitzgerald. And so say 50 billion. I mean, it might take 2 days, but they're solvent. Okay. He spoke at Bitcoin 2024 and said they were able to meet a 2-day $10 billion redemption attack on Tether by FTX. As for this allegation, I'm sure some Tether may slip through sanctions and be used for money laundering. In fact, two of the largest scam sectors, DeFi and NFTs, are hotbeds for money laundering. However, this activity is not a core part of Tether's business. Far more laundering occurs in traditional banks knowingly than slips through the cracks with Tether. Bottom line, this is FUD. Powerful globalists want to destroy Tether to clear the way for a CBDC. So I am a Tether supporter. All right, that is that topic. Let's go on to the next story. BRICS talk about using Bitcoin. This gets kind of exploded here a little bit today. But remember, if you rewind the clock, all of it is about the news, the currency. Like if you go back to Friday and even my thumbnail is showing Putin and the currency. All that talk was about them launching a basket of basket case currencies, of just a group of really kind of shoddy currencies lumped together. Doesn't make some great alternative to the dollar, but that's what we were being told last week during the BRICS summit. Now it's starting to leak out, and people are starting to talk about this much more important aspect of them talking about Bitcoin and using Bitcoin as an international settlement. The real news from the BRICS summit is their discussion of Bitcoin. Quote unquote, top lawmakers are reportedly discussing Russia mining Bitcoin and BRICS countries using it to bypass Western sanctions. They know what the deal is. So you can see right here in that image. Also, this morning, a Van Eck representative, I think he's like head of digital assets or something at Van Eck, and he said, quote, 3 of the 6 new BRICS members, the UAE, Argentina, and Ethiopia, are mining Bitcoin with government resources. Head explode, head explode. That should be a statement that makes people sit up and take notice. 3 of the 6 new BRICS. And now we have Russia talking about it, right? And China used to be the dominate Bitcoin mining. There's been rumors that they still have Bitcoin mining over there in China. And since they're communist, all Bitcoin mining is actually state Bitcoin mining. But yeah, so that should be sending alarm bells off to people. Russia's sovereign wealth fund is investing in Bitcoin mining throughout the BRICS countries to settle global trade in Bitcoin. And let's just listen to this a little bit. Let's make sure my levels are up. And I'll be watching that.
Yeah, it's a non-U.S. asset. It's an emerging markets asset. And while we were all hyperventilating about the election over the last week, BRICS had a conference in Russia. There's 6 new members of BRICS this year. So BRICS GDP is now greater than the combined GDP of G7. Of the 6 new members, 3 of them, Argentina, the UAE, and Ethiopia, are now mining Bitcoin with government resources. So there is tremendous urgency outside of the U.S. to find a way to circumvent the irresponsible fiscal policy that we've been running here in the U.S. In fact, Russia announced an initiative. Their sovereign wealth fund is going to invest in.
Okay, I take a little bit of issue with that. It's not necessarily to get back at U.S. for the irresponsible fiscal policy. It's more like the U.S. dollar doesn't work so well for them. Okay, they're under tariffs, they're under sanctions. And so they have to use something other than dollars, not because they want to, but because they're being forced to. It's kind of like, if once you understand that money is the most saleable good and why everybody converges typically on, if they can, on one form of money, one global form of universal money, whether that be gold or silver or credit, which we have now, US dollars as credit. The economy converges onto one reserve currency because that is the most efficient. If you have multiple currencies, then you have multiple prices, and you have arbitrage, and you have slippage, and you have inefficiencies built into that. Okay, that's why everything converges on to one. And now, if you are a BRICS country and you want to move away from the dollar, what you are doing is you are inviting that inefficiency in to your economy because you are forcefully not using the global reserve that everybody has consolidated on because money converges to one thing. That's why money will converge onto Bitcoin eventually. And the easiest route, the fastest route to that is for Bitcoin to back the dollar, which that is becoming a bigger and bigger topic out there. So no, money converges on one thing. You're not going to move away from the dollar unless you have another alternative, which now that they're talking about Bitcoin, that is more realistic, but it's not because of the fiscal irresponsibility. So let's just listen to that one more time.
Urgency outside of the U.S. to find a way to circumvent the irresponsible fiscal policy that we've been running here in the U.S. In fact, Russia announced an initiative. Their sovereign wealth fund is going to invest in a regional initiative to build Bitcoin mining and AI infrastructure throughout BRICS with an idea of settling global trade in Bitcoin. So look, someday, I don't know if it's 5 years, 10 years, Putin's going to die. We're going to look to reintegrate some of these countries into the world financial system, and they're going to be trading with Bitcoin. What are we going to be doing?
Okay.
Boom. I mean, that should get everybody pretty darn excited. All right, let's make this bigger here. All right, moving on to the next topic. That's all the Bitcoin headlines. We're going into macro now. This is a Bank of Canada cuts 50 basis points and the ECB cuts 25. The Fed next. So here is the Bank of Canada's rate cuts down to 3.75. Remember, the US is at 4.75 to 5%. But they are cutting rapidly. Very, very rapidly. I saw another thing too of inflation, and their inflation is dropping below 2% up there. Their CPI for Canada. So yeah, they're running into the deflationary end. Like all of this quote unquote inflation was transitory all along. How long is transitory? Well, if you say transitory is just 6 months, I mean, you're kind of that's wishful thinking. Okay. The global economy and the US economy, they are gigantic oil tankers. They turn very, very slowly. Okay. So they turn slowly up and then they turn slowly back down. But it was transitory all along because of the way the global economy is structured right now. All right. So the ECB also cut. I don't have a chart of that one though. And the Fed's decision is up November 7th, 2 days after the election. Right now, the odds suggest a 25 basis point cut, but I put the odds of a 50 basis point cut at more likely. And I've been doing this all along. If you guys have been watching me, that I always think there's more chance of a bigger cut. And the minutes kind of prove that out. Some of the beige book stuff or some of the minutes that have come out have shown that they discussed this, whether they should have cut 25 basis points 2 meetings ago instead of 50 basis points last meeting, something like that. So I always think that there's slightly higher chance of more cut. And right now I would put it at 25% for 50 basis points, but we will see what happens with yields and stuff over the next 2 weeks. Okay. So moving on to the next topic, TSMC's Arizona chip production yields surpass, I put the emphasis on the wrong syllable there. TMC's Arizona chip production, I did it again. Arizona chip production yields surpass Taiwan's in win for U.S. push. That is a horrible headline. That's a tongue twister, man. Okay, so let's read a little bit from this article because this is big news. One of the weak points for the U.S. economy is chip fabrication. We have a lot of the technology. We have a lot of the high-end stuff, but we don't have the stuff that was going on over there in Taiwan. Now, a bunch of these factories are moving over to the U.S., and it's looking more and more likely that very soon we're going to have at least the start of an independent chip fabrication in the United States. Now, some people might say, oh, yeah, but China can do the same thing. Kind of, all right? They don't have the high-end technology. Remember the story of the ballpoint pen. They couldn't make a ballpoint pen in China. They could put it together once they got the parts from other places, but they did not have the machining for the fine ball bearing at the end of the ballpoint pen. It wasn't until 2017, after a 5-year project by Xi Jinping, like this was an important thing for the Chinese economy, that they wanted to be able to manufacture all the parts of a ballpoint pen. That didn't happen until 2017. So imagine a high-tech chip. A lot of that is proprietary, either from the Netherlands or the US, and that's not going to China. And so they don't have the same capability that the US has to make these chip fabs. But anyways, I mean, they probably think we'll just take over Taiwan and then we have it. But that's probably a long shot. So TSMC's new Arizona chip production plant has already surpassed yields at similar factories in Taiwan, which Bloomberg calls, quote, a significant breakthrough for a U.S. expansion project initially dogged by delays and worker strife. The share of chips created at TSMC's new Arizona facility produces usable chips at a rate of 4% higher than the Taiwanese plants, according to TSMC's U.S. division president, Rick Cassidy. So this is from a TSMC president of the U.S. division. So this is not fake news or anything. They wouldn't really have a reason to come out with this if this wasn't true. So TSMC's CEO said last week during an investor call, quote, "Our first fab entered engineering wafer production in April with 4 nanometer process technology, and the result is highly satisfactory with a very good yield. This is an important operational milestone for TSMC and our customers, demonstrating TSMC's strong manufacturing capability and execution," end quote. All right, so that's all I have for that. I think it's a pretty big deal. Let's go on to the next headline, and this is all about fertility rates. So before I get into that, because it's a little bit longer, let me check and see if you guys are watching. 330 people watching. What's going on, guys? Most of you probably on Twitter. Jump over to the YouTube Rumble. Links are in my pinned tweet, and comment over there. It comes with the interface is real good here. I use Restream as the back end, and so I can answer your comments, questions, concerns, anything you have. I'm trying also to get to 1,000 subs, so I'd appreciate it if you subscribed over there on the YouTube. Help me get to that goal. Now let me check Telegram, see if there's any other comments. Nope, just points from earlier. I will be getting to that point when we get to price. Okay. Back to it. Now, fertility is one of the big things for me because fertility rates and declining population, aging population, it locks in a credit bust. All right. So if the world's population is going to be decreasing by, say, 1 to 5% a year over the next century, there's no, the credit markets will shrink. There will just be fewer people. Yeah, there might be inflation and the credit markets can actually nominally go higher, but productively as a productive engine, because you don't take credit out just to balance your balance sheet. You take credit out to actually do stuff, right? Be productive with the credit. Well, that productivity from the credit will shrink, even though nominal amounts of credit might continue to rise. And fertility locks that in. So that also will lead to credit collapse because that credit will be less productive, but the burden will be higher. So you have higher debt burden, lower productivity, lower amount of people, and it's just a downward sloping line. But anyway, what I did was some new numbers out of South America came out. So I wanted to cover those. And then I want to take a look at Seoul, Korea, South Korea specifically. So every fertility update looks worse than the last. New numbers from South America are no exception. And it's actually Latin America because we have Guatemala and Mexico here with projections consistently missed to the downside. Just look at those rosy projections. They've all been missed badly with fertility declining faster than expected. So these are all these predictions, and the actual just continues to drop faster and faster than they would ever imagine or predict. I mean, look at Argentina, just boom. Look how close they are to 1. So Guatemala is breaking below 2 here. Mexico is far below 2, about 1.5. Argentina far below 2, down to looks like about 1.3 or 1.4. Uruguay 1.2. I mean, these are some nasty, nasty numbers. Chile is down below 1, guys. And see all these projections in the dotted line, this dashed line, they are all like leveling out. Okay? They're all leveling out. But that's not what fertility does. That's not the pattern we've seen. The pattern is consistently lower and lower and lower. There is no leveling out. So why would they level this out? They're just going to be wrong once again. All right. So those are those numbers. And I say that Guatemala and Mexico are crucial for U.S. immigration. Maybe not Mexico so much anymore. I think it's actually net negative immigration for Mexico. More people are moving to Mexico, but maybe I could be wrong about that. But I'm speaking specifically about immigration. Okay, so a lot of people think immigration can supplement the fertility decline in the United States, but they're wrong. These countries are running out of people fast, and their fertility is very, very low. Even in Africa, fertility is dropping very rapidly. And the more developed a country is, the faster and faster their fertility declines. Okay, so then I wanted to bring this idea in. So Sam Obergia, you guys can search for him on YouTube. He has a couple different channels that he goes on regularly, and he's been talking a lot about demographics. And he asked this question, or said in this one of these podcasts I listened to, that we might soon see a city with 0% TFR or 0 TFR. And this is a city because, cities are urban areas are where fertility is lowest. So for example, here, Seoul itself as a city has a TFR of 0.55, and that's probably high. But South Korea as an entire nation is up there at 0.68. So slightly higher, maybe 25% higher than this 0.55 of Seoul. Shanghai is also at similar levels to this, 0.5. So Seoul's, but we don't have really good numbers about China. So I'm sticking with Seoul. So Seoul's fertility rate dropped from 0.63 in 2021 to 0.59 in 2022. That's a 6% drop. Okay. Then it dropped further to 0.55 in 2023, a decline of 6% each of the last 2 years. So it keeps going lower. And I think, if I'm not mistaken, it actually increased. So this last year was a faster decline. I think it was 6.8%. I'm trying to remember the math. 6.8% last year, and 2 years ago, it only dropped 6.3%. So it's increasing. See, the amount of decline is increasing. So at this rate, it only takes 30 years to fall below 0.1. I had ChatGPT make me some population pyramids for Seoul specifically. It messed up and labeled it as South Korea, but just think of this as Seoul. And I modeled a 6% yearly decline, which it is higher than that. Okay, to compare and visualize this decline. The same horizontal population axis is used to see the shrinking. So this is the current population pyramid, and it's top heavy. See, it's supposed to be squat. It's supposed to be larger as it goes down. Because you want to have a growing population, at least slightly growing. It would, a really good population, at least in the world today, a really good TFR would be 2.2. So that's just above replacement, just growing a little bit, and the pyramid would be outward sloping the whole way down. Okay, but this is declining fertility rates as you come down in here. Now, let's move out 10 years and assume a 6% per year reduction. And I'm going to zoom out so we can kind of see these next to each other a little bit better. So this is assuming a 6% reduction year over year for 10 years. See that, how that population pyramid narrows? That's a declining population. Okay. It's also getting a little taller, but it's narrowing. They're losing population. If we've got another 20 years, look how narrow it is. This is crazy. So I'm not saying this is perfect. I mean, I'm not saying that this is going to happen immediately, but what I wanted to show was that this doesn't stop. Okay. This doesn't stop. All right. So that's it for the fertility stuff. Let's go into price analysis. But before I do that, let me check and see if there's any comments. Probably have to take another look at that fertility stuff because I think I have a mistake there. Why is fertility dropping like this globally? It's hard to understand the driver since it's affecting everyone everywhere. Yes, BTCP, we don't know. Nobody knows why it's dropping. I think it could be a combination of multiple things. People talk about like plastics in the water, microplastics affecting testosterone or affecting male fertility specifically. That could be playing a small role. But the most highly correlated thing is female schooling. Female schooling. As female schooling goes up, fertility rates go down drastically. And that is a hard fact to come to grips with. That's why a lot of fertility discussions get labeled as misogynist or anti-women or something like that. It's not. It's just hard facts, but half the population isn't really wired to talk about hard facts that go against them. And so there's going to be some hard truths. I think that the populations will continue to decline until, as a planet, maybe, or as individual countries, I would say that, as individual countries come to some harsh social realities. Will that be in our lifetimes right now? Probably not if you're listening to this podcast, but it could be in our kids' lifetimes that major social changes get rewound, if you will. Because if they don't, it's not a bright future at all. This is accelerating. So anyway, that's what I would say about that one. Okay, let's go into price analysis. Last week, I said price was kind of slow. It was hanging out there near the all-time or near the breakout for the pattern. I was very confident, and not much has changed. Okay, that we are going into the election. It's getting a little dicey here around the election, but it does look like Trump might be pulling away with this. So I've seen some predictions or some polling that shows that it could be a popular vote win. Actually, that would be the first Republican popular vote win in 24 years or something like that. No, that couldn't be right. In 20 years. And then before that, it was 20 years before that. So it's very rare that the Republicans get a popular vote win. They just win through the Electoral College. But it does look like Trump is running away with this at this point. So that might allow markets to breathe a little bit easier. Okay, anyway. Again, this week we are waiting for the breakout. Shorts have been successful in putting it off long enough. When it happens, after all this buildup, I think it will be a rapid rise to the all-time high. On the heat map, notice the scale on the left. The top number is 34 billion. So I'm talking about this number over here. The scale is 34 billion in the most bright square. And if we zoom in to that section right here, it turns out that level is at 70,400. So that's when all of the liquidations are happening. And as I'm speaking here, let's go and see what's going on with the live price. So here's the Bitcoin daily chart. You see the last line of defense was this line right here, using the Pico tops of these wicks, delayed the breakout here and is going up now, breaking out of that resistance. I could add on here a line at 70,000 being a round number and a easier line to hold, say, because there are a lot of these shorts are going to be getting liquidated. So they are trying their best, desperate to not allow the price to go above up to like 70,400. And so 70,000 seems like a very nice round number to kind of make your very last stand, which might be a sell wall here at 70,000, which we're experiencing right now. But once that breaks, okay, all-time high is very close. Let's see, actually from the current price, all-time high is only 5% above. That's nothing for Bitcoin. It can do that in an hour. So that's what we're talking about with all of this stuff. Okay, so back to the report. That 70,400 is right there where all the 34 billion are located. And there's even more above, as you can see. It goes into hundreds of billions probably if you add all this together. This is from CoinGlass. I linked to it for sure for you guys. And on CoinGlass, which let's just bring that up. So on CoinGlass, right here, you can select symbol. There was somebody in the comments of one of my videos saying you can't pick. It's not an aggregate. It's just for Binance. Well, they have this symbol here, so you can get the aggregate for all of these liquidations from a bunch of different exchanges. Let's see what exchanges there would be. So here we can pull down. We can see we have Binance, Bybit, BitGet, OKX, HTX, BingX, Deribit, Crypto.com, Bitfinex, BitMEX, Kraken, CoinX, Coinbase. So all of them, all the majors, okay? So that's what this symbol will give you here, an aggregate of all those. Okay, back to the report. And that's it for the liquidations. They're trying really hard to protect themselves, but I think they're going to lose this battle. Okay, total ETF flows saw several strong divergences last week with positive flows while the price went negative on the day. I've been talking about this way of viewing flows because there is a, if the Bitcoin price goes up by $1,000 and you have 100 million in inflows, that really doesn't tell you much. Okay, the flows are going to follow the price or vice versa. They're going to match in a normal day. All right. But where there's a divergence, that's what should pique your interest. So if there's an inflow of, say, 300 million on one day, but the price goes down by $2,000, that should be like, what is going on? That is definitely a divergence. And we had a couple of those last week that were very strong. So to me, I'm treating this as a leading indicator for bullish price action. When you have a divergence of inflows with negative price, that most likely is something like these shorts up here at 70,000 trying to protect themselves. Okay, so they're trying to push the price down, but all of these inflows are coming into the ETFs. So they're just trying to fight this constant inflow and they'll eventually lose. So anyway, that's how I'm looking at it. Total inflows are now 10 billion above where they were at the all-time high. So if we pull this up back here, roughly this peak coincides a little bit after, but it coincides with the all-time high. And that was at just under 12 billion. It's like 11.9 billion of inflows. And now we're above 22 billion. So we've added 10 billion of inflows and the price has not gone up. It's actually gone down slightly. So that is a lot of pent up price discovery that we're about to go through here. Price has risen 8% in October. That was at the time of writing. It's probably up 10% now. Let's go into the chart and go to monthly candle, and we are at 10.03%. So October has gone up 10.03%. If we have a big day tomorrow and we get to the all-time high, that is, what will that put October at? That'll put October at 16%. That's pretty good. I mean, I was expecting more, but let's get back to the report. So I was expecting something closer to 25%. We're now only 7% from all-time high, but not anymore. The monthly chart provides context for how close we are to the all-time high and how bullish things look. So we're just a gnat's ass away from the all-time high. And I made sure I included the halving from last cycle along with the U.S. election and what's happening here. And you can see it's very similar. It's not the exact same, but it's very similar. And we're coming up to the election to complete this cycle. And we're gnat's ass away from the all-time high. So this could get there. There's nothing here stopping it from touching that all-time high within days. I think we can get there. So the daily chart shows a golden cross of the 50 200-day moving averages. Price initially dipped toward the cross last week, as I often talk about, then rallied back to resistance. So you can see death cross here. And at the time, I was like, these crosses are typically attract the price. And why is that? Because they become shelling points and there's a lot of liquidity there. So I like to read charts, and what I always have in my mind when I read charts is about shelling points. Where are people looking? What's the point? What's the levels of interest? You can get that from many different things. You can get that from moving averages. You can get that from Bollinger Bands. You can get that from volume by price. Anything that a lot of people are looking at, that is going to be a shelling point and be attractive to price. Well, now when we have a golden cross, well, anyway, the death cross here surprisingly attracted the price up, which people are supposed to. The death crosses are supposed to be negative, right? They're supposed to be bearish, but the price shot up here right into that golden cross. Well, on a death cross, on a golden cross, it's supposed to be positive, bullish. Excuse me, I have a little bit of a cold. It's supposed to be bullish, but price tends to come down. So it did come down last week towards this cross, and now the cross has happened, and so it can go up. Now the real bullish effect is going to be felt. Okay, so that is that one. Point if you have anything else on that you want me to cover, put it in the comments. Investing is as much about timing as where you allocate your capital. Right now, the risk of missing a significant breakout far outweighs the risk of a breakdown. So the risk to the upside is way higher than risk to the downside right now. So if you're waiting to buy a dip, you probably want to second guess yourself right now. If you're unconvinced of the timing, at least DCA part of your allocation in very soon, because the risk is to the upside greatly right now. I don't see any way we're going to like crash down below 60 or anything like that, but I can totally see a spike up to 75. Okay. All right. Macro, considering price here, the macro atmosphere is summed up in this great chart from Andreas Steno, who we did interview back on FedWatch. Oil prices in blue, they lead yields. When oil prices fall due to weak demand in a recession, there's a flight to safe assets like U.S. Treasuries and yields fall. We can see the hidden recession in this chart. So a lot of people, are we going to have a soft landing or whatever? No, this chart shows us that there is actually recession coming because oil is breaking down while yields are continuing higher. But this happens a lot. Look back here. In 2023, we saw yields continuing higher. This was the cycle high so far at 5% for the US 10-year. But oil had turned down before. See? And so what happened then? Then the yields started coming down. Then they kind of went up together, but oil fell first here starting in May of this year. And then yields eventually turned over. It's a matter of a couple weeks before it agrees. Now, this is quite the divergence here. And I believe that can be explained by the Fed cut, Chinese stimulus, and Trump euphoria or Trump excitement. So once that wears off, yields on this chart are going to catch back up to where oil is, and that's going very low. So by this chart, we should expect the US 10-year probably by end of first quarter next quarter to be below 4, maybe all the way to 3.5. Okay. But that sums up, I think, is a great summation overall of the macro atmosphere right now. Okay. For Bitcoin, we're close to the liquidation levels. ETF flows are skyrocketing, reducing supply on the market. Resistance is weakening, and macro forces favor safe haven assets like Bitcoin. I wouldn't be surprised by a new all-time high within days, even before the U.S. election. Gains will come quickly once they start. Remember, a majority of the yearly gains for Bitcoin were in February, 1 month. So when gains happen, they happen fast. And probably that will be more common in this new era of mainstream or institutional adoption, because they don't want people to get in, you know? So they will accumulate, try to manage the price as well as they can so it doesn't explode while they're accumulating, then let it explode really briefly. Their competitors or laggards can't get in because they're not going to buy when it 2x's. Most people don't, at least institutional people. There will be degens that buy in, but then it's going to go sideways for a long time. And we can see this on the chart. If we pull this back up again and we just take a look at this. So I've showed this a couple times, but you can see, let's see, where am I going? We had coming up here, then we had this period of flat and sideways. Then we had this big gain, and this happened relatively fast. I mean, again, this year, so where did this year start? Right here. So most of the gains this year came in February, as you can see, this big candle, monthly candle. But now we have been sideways in another consolidation zone. So then if we think about this, where's it going next? Okay. Probably up like this, copying this arrow. And then we'll have another consolidation zone up here somewhere, wherever this ends up. That takes us into most of next year. So whatever you think about the 4-year cycle and all that stuff, this is where we're going to be talking a lot about the 4-year cycle. Are we at the end of the cycle? Is it extended? Is it delayed? Is it cut short? What are we talking about with the 4-year cycle? Because every year the halving is getting earlier. And so if you are using the halving to count the 4-year cycle, that blow off top should happen earlier and earlier every cycle. But anyway, we'll talk about that when we get there. Let's go back to the report. And that was it for price. Let me check any comments here. John Delaney, what's going on? BTCP, bullish divergence on ETF flows and price action. Yes, sir. I'm liking that. I think that definitely is a leading indicator. Let me check on Telegram. Okay, Larry Jr. asks if I can explain a sell wall. So yeah, a sell wall is where a bunch of orders are placed. So if you think of I should have my drawing tool out, but hold on a second. Trying to think if where I can go on the interwebs to find this. I think CoinGlass has an order book. Okay. So yes, look at this sell wall right here. So this is all of the orders on the books for futures Bitcoin Tether. And we can do Bitcoin just regular USD. But you can see this is the volume. So these are all the orders. If you stack them up, what the volume of it is. If you go all the way out here to 70,500, which is roughly where all the liquidations are happening, you have about 5,000 BTC in total sells. Okay. And if you stack up a bunch of sells, then that means the price can't go above that until all of those coins are bought. There was a famous instance in Bitcoin history that called the bear whale. And what he did was, I think he had like 20,000 Bitcoins or something, and he put them all for sale at $300. And the price could not go above $300 because it would just chew away at his order. It couldn't go higher than 300 for, I think, I think it was several hours, like maybe 12 hours or something. He thought that he could control the price. And so he dumped this gigantic sell wall of 20,000 Bitcoins at $300, but the market ate right through it. And then what happened after that? The minute the last coin from his sell wall was eaten through, price spiked. I think over the next couple of days, the price might have doubled. And so, yeah, that's what I'm talking about for a sell wall. As you can see here on this chart, there's many more Bitcoins for sale than there are bids to buy them. And it gets really steep up here, 5,500, trying to keep the price from going higher. All right, so that's that. Let's go back to the report. Sorry, I have a stuffy nose and getting over this cold. My boy got sick like 5 days ago, and now I've had it for 2 days. But anyway, okay, headlines for the mining sector. So Bitcoin miners and AI. I've talked about this for several weeks. Going back, you can find me talking about this AI stuff with the miners. But there's been a lot of headlines in the last month or so, mainly around TeraWulf and Core Scientific. Those are the two biggest names that are really going down this route publicly. Okay, they're trying to raise money by saying we're going down the AI route. All right. So this is becoming a relatively hot topic in the Bitcoin mining sector. And some people say it's great for diversification. So you have two revenue streams. Now, the jury is definitely still out. I fall on the side of it's probably not smart. So you want to stay Bitcoin only, and then you can have a subsidiary, say, that does AI, but you almost want to make it a separate business because you don't want to stand by. Sorry about that, guys. Wife got home, scared the dogs. We are dog sitting as well. So fun times here at the Linder household this weekend. Okay, where was I? TeraWulf and Core Scientific and AI. I think that it is not good to mix your Bitcoin business with your AI business because AI can be a big time bubble. We don't know exactly how it's going to work out. There are just as many positives, or I should say, like bullish people as bearish people overall on AI. And so we don't know exactly where that's going to work out. Right now, it seems to be pretty frothy. And Bitcoin mining is kind of the opposite. Okay, we have time here for the Bitcoin price to go up in a bull cycle. And so, yes, if you want to kind of go from these 2 years, we're going to do AI or concentrate more on AI, and these 2 years, we're going to concentrate more on Bitcoin, that's just not really a good business plan to be running. So I say just stay Bitcoin only, stack as much Bitcoin as you can. Don't worry about the AI. If you want to do it because you have extra facility space or something, have a subsidiary do it. Sell it to another company that is doing, managing AI computers and stuff. But that's what I would have to say. That's become a big topic here, though, in Bitcoin. So TeraWulf, strategic shift towards AI is a key focus for the companies and analysts. The company has ordered 128 GPU clusters for its pilot project and plans to complete a 20 megawatt AI building by the end of 2024. So this is all wasted energy when they could be expanding their Bitcoin mining. Okay. They're not going to be doubling their money with this AI in the same amount of time that Bitcoin's price is probably going to double in this bull market. Management has indicated strong demand for AI with plans to add an additional 200 megawatts in the latter half of 2025. Okay. And then CoinDesk also had an article here for Core Scientific. Core Scientific uniquely positioned to capture AI demand. I just think AI is overhyped. I mean, I use it. ChatGPT, you saw I created those demographic pyramids and stuff. But it's pretty overhyped. It doesn't even catch all of my errors. Okay. Next topic for Bitcoin mining is this is the year-to-date chart for major miners. Other notable miners include TeraWulf and Core Scientific that we just talked about, and they're not shown, but I want to write a blog post about those this week, so be watching out for that. But this is a year-to-date chart, so you can see most of them were underperforming back in September, October, from zero. I'm not talking about underperforming Bitcoin, underperforming period, as they were down on the year, negative. Now they're starting to come up. Marathon, Bitfarms, Riot are lagging. Okay, Cypher, Hut, and CleanSpark are positive now. Hut really had a good move here over the last couple of days. So that's that. Hash rate and difficulty. All right, so hash rate, after hitting an all-time high in hash rate last week, this week we are at an all-time high for difficulty. Hash rate is only slightly lower than last week as price looked prime for a breakout. I fully expect hash rate to follow price higher. Overall, the mining sector is very healthy and growing fast. So you can see here, this spike back here, it's kind of hard to see on the screen because it's so dark, but this was the high for hash rate last week when it looked like we were going to break out. Then it kind of reset. It is still high right now, but not as high as last Monday on the last report. All right, mempool. Mempool remains largely unchanged from last week. Fees rose midweek due to price excitement, but have since come down to very low levels. So these colored bands are fee bands. So 1 to 2 sats per virtual byte is this pink. You see that's pretty much all that's left are these very cheap transactions. The next band is 3 to 4, and then 5 to 6, et cetera, et cetera. You can see some brief periods this week where it did shoot up and fees got a little expensive as prices probably having some exciting times, either dipping or going higher. But overall, it is very low. Mempool is very, very low right now. Okay, layer 2, and this is the last section. So let me go here and see if there's any comments. So Vid Gamer asks, can I explain short liquidations? Why haven't the traders closed those positions as the price rises? I don't know. I don't know why they haven't closed them. They're getting squeezed. Right now, they're still positive, right? Because price is under, well, they wouldn't be positive. Maybe that because that's forced liquidations. I don't know. I've traded in the past, and it is hard to stick to your stop loss. You'd have to ask them, but that is where the liquidations are being reported. And so actually what happens, okay, so you want me to explain the short liquidations. So if you open up a leveraged short, you're betting on price going down. And you can, you have to only cover a certain amount of the size of your trade, the value of your trade, with your own money. So like if you want to go 3x, that means you only have to have 33.3% of the capital necessary to make a trade of that size. And you would get liquidated, say, if they have limitations on how low your margin can go. So say 3x is the most margin you can have. Well, if it goes against you at all, the software of the exchange is going to force you to close that position. And what does that do? You have to buy back the Bitcoin. Because to short, what you're doing is you're borrowing Bitcoin to sell it. And then in the future, you hope the price goes down so you can buy it back lower and then return it to whoever you borrowed it from and get the difference. So you're selling it. You're selling the Bitcoin. When you get liquidated from a short, you're forced to buy back the Bitcoin. And yeah, so they're doing that as the price moves against them. The amount of their margin is getting squeezed. And eventually, they're not going to have enough margin to keep that open. There are margin calls on traditional exchanges. I don't think they do them on any Bitcoin exchanges that I know of. I mean, maybe Deribit does it, but you have a certain period of time to increase your account balance so you can keep that margin leverage at a higher percent. And I don't know how long that margin call window is open, maybe 6 hours, maybe one trading day, something like that. But then you would be liquidated. So that's what the short liquidations are. You're forced to buy back the position to close it. In other words, Dex Invictus back with us. Raphael, haven't been able to watch lives lately. Listen to the podcast version though, but I feel the episodes are behind sometimes. Yes. Yeah, man. I have been getting out all of those as fast as possible. I get behind, but here is the stuff that I put out this week. So you can see this E405. I'm about a week behind now, and I have them loaded up to continue to publish this week. My goal is to stay less than 1 week behind. So yeah, I have gotten behind on the podcast, keeping it fresh, but I'm trying to get caught up right now. I don't think it will ever be the case that I can get it out the next morning though, because I'm usually done with these live streams roughly around now. And I have a big family, so I have to, do dinner and take to sports practice and all that stuff. So there's no way that I can get them out the next morning. But maybe I could shoot for like 2 or 3 days down the road, because I'm getting pretty good at the process that I'm using to get those out as fast as possible. So I'll make you a promise here. I'll shoot for 2 days to get those podcast versions out once I get caught up. All right. Let's see if Telegram has any comments. No, that's it. All right, guys. Last topic of the day is going to be layer 2. Not a Bitcoin layer 2. This is Kraken. Okay. Kraken launches a new wash trading platform. Kraken has launched a new layer 2 platform called Ink, similar to Coinbase's Base. So interesting. Okay, I get it. Kraken, Ink. These are not serious projects. They primarily offer exchanges a way to scalp fees from degens. Despite the supposed popularity of Base and this new effort by Kraken, prices have not risen for altcoins as one would expect, and especially not Ethereum. Get that jab in there. Therefore, it's safe to say there is some funny business going on. Most likely, fake wash trading volume, in my opinion. In general, altcoins are approaching multi-year lows against Bitcoin. I recommend not going near these projects. So Base is a lot of volume right now for layer 2 and coins and NFTs and all that stuff. And now Kraken is doing this, but it has not jump-started the economy, the altcoin economy. Think about this. If volume was skyrocketing on Base and for altcoins in general, then you would expect prices to be going higher. But they're not. They're stagnant to down. So that tells me, I think it would tell any kind of neutral observer, maybe I'm not neutral, but any sane observer, that this volume is fake. And I'm not saying that Kraken's doing it. I'm not saying Coinbase is doing the fake volume. But the people trying to pump and dump you are doing the fake volume. They're trading to themselves. That's why you can't even use on-chain volume for most coins. Bitcoin, right now, you couldn't because the fees are so low. But if fees are higher, then you can more likely trust kind of on-chain volume, because people can just trade back and forth to their own addresses. Okay. And make volume look a lot higher because it costs them very little to do that. And they're hoping that high volume looks bullish and people get in and buy their coins, but that's not happening right now. So we can tell that this is most likely just wash trading by scammers. And guess what? Kraken and Coinbase are profiting off of scammers trying to scam you. So it's just one scam on top of another. All right. Anyway, stay away from that. If that's my opinion. All right, that's all for today, guys. Remember, check out the white paper special discounts on paid memberships. Appreciate everyone that does support the show. This is a complete listener supported show. So my content is enabled by readers and listeners just like you. So appreciate that for everybody. All right, this was the Bitcoin fundamentals report. Make sure you're subscribed at least to the email list. And let me check one more time on comments. I'm not seeing any other comments in here. Let's see who is watching. We have 449 people. Damn. Thank you guys for joining me. Ansel Lindner, Bitcoin and Markets. This is the most comprehensive newsletter in Bitcoin. It goes out every Monday, and then I live stream and chat about it. I'll open it up to comments out there on YouTube and Rumble. It comes through my interface really easily. So if you're watching on Twitter, jump over there to the YouTube. The link is in my pinned tweet. Trying to grow the subscribers over there, get monetized, get to 1,000. We're just over 500 now. So I appreciate people that go over there and subscribe. Bitcoin and Markets is a long time running thing. You can see this is issue number 311. It's weekly. So that tells you how long I've been doing it. And completely listener supported, never sold a scam. And I put out, I think, high quality, directionally correct, and kind of insightful stuff. I mean, sometimes I pick trends or pick topics that months before they blow up. Like I've hit on China. China was one of my big calls, pretty much the only person in Bitcoin to be bearish on China, debunking the Thucydides trap years and years ago. What else on macro stuff? Called transitory for inflation, which it was transitory. For Bitcoin, I mean, you can go back and look at all of my stuff. I've been directionally correct, and I've also been quite accurate on a lot of my levels and things like that. I put out the forecast that has a professional tier forecast that goes to a near-term price target, medium term, and cycle. Like, what is the target for the cycle? I've been in Bitcoin for 10 years, so that's my pitch here to you guys. New people watching, 462 beautiful people watching. Jump over to the YouTube and subscribe. Check out bitcoinandmarkets.com. All right. Enough of me jabbering. It is 5:45 p.m. Eastern time for us, and I got to go do dinner with the family. So thank you guys for listening, and I'll see you on the next one. Bye.